Let's see, live. Chat mode. I think I am live. Not sure if I'm live. Is my screen? Let's see. Am I share screen? Yes. Okay. Let me put that over there. Over there. We go there. Let's see. In stream. I apologize, folks, if this is my very first live stream. Let me grab a chart here. And actually, what I'm going to start with, let's start with a brand new chart. And we're going to call this live on the 15th of August. And what I want to start with is Dolly Varden, just for funsies. And so there's the stock on the TSXV. That's the Canadian exchange. Let's see. I wish there was some indication. You know what I'm going to do? If you can see me or hear me, could you please throw a comment? Please throw a comment in there so I can get some indication that I'm actually live. Let me see if I go to. I'm opening, and again, apologize, folks. We'll get started here very shortly. But I'd like to get some indication that I'm actually live. Let's see, where are we at? Shoot. I'm sharing live. Okay, well, there's live. Okay. Live now, live trading. How about technical analysis live? Put the brand in there. Ah, there we are. It's live, shows that it's live now. I don't want sound there. But that's not the screen. Let me stop sharing that screen and let me share a window. There we go. That's what we want. Ha. We'll share. That's what we want. Okay, now, now we're cooking with gas. So what I like to do with technical analysis is start with a clean chart. What I've seen in my journey of learning technical analysis, and so I've been to any number of courses, read books. The most advanced training I've received is from Dr. Timothy Morge. He was a professional trader for 40 years. He is now passed, so rest in peace, Dr. Morge. Thank you for your valuable training. And so anyway, in the process of my learning, I saw students like myself with just way too much on their charts, cluttered charts. And I've always, for a long time, I've known and believed that a cluttered mind says no, or a confused mind says no. If you're in the sales realm, a confused mind says no because they're confused. And so when you get too many lines and too many indicators on your chart, it's too much information. And quite often the indicators conflict with one another. And so, you've got a MACD buy signal and an RSI sell signal, and then how do you process that? And so that would be the first thing I would suggest is don't overcomplicate your charts. So here we are, we're looking at Dolly Varden. Let me take volume off the screen. So blank chart, I prefer to start in at least the weekly time frame. It's the idea of getting a big picture before I zoom in. I don't want to start with a tick chart, which is down at the sub-second level. I want to start at the big time frame and work my way in. So you can see now I just switched to the monthly time frame. Dolly Varden has not been around for a long time. So in the monthly time frame, we don't have a lot of information to go on. But let's see what we get. One of the first things I noticed, well, actually, it is the first thing I noticed, is that we've got a general uptrend. And again, it's general or gentle uptrend. And so we can draw a simple trend line. Basically, we're just catching the bottoms of this price action because I want to emphasize this price channel. And notice that this is very common in my experience. I'll go draw a trend line along one side of price action. I copy that line, I duplicate it, and then I set it on the other side of the price action. So in this case, we've got a trend line on the bottom. I go to copy that line. I move it up to the top of the price action. And so look at that. We've got a very clear price channel going on there. So, and that was just the starting with the clean chart. What do I see? And as you do more technical analysis, you will become better at seeing these kind of things. So that's an example of simple trend lines. Let's drop down to the weekly time frame. where we're going to get some more. We've got more price action. See, the lower we go in time frames, the more price action we have to work with. And so there's a couple of things I see here. I like Andrew's pitchforks. And so when I see something that obviously catches my eye as a potential fork, potentially a valid pitchfork, I like to draw that in. And that's what I've done here, is that that's a simple Andrew's pitchfork. I don't really like it. It's not as clean looking or as I would like, and so I'm going to take that off the screen. Weekly time frame, price channel. Notice that these trend lines we can also talk about in terms of support and resistance. And so obviously at the bottom we've got support, top we've got resistance. And so as traders, we've already got some valuable information from just this little bit of simple analysis. That basically we can look at this as a trading range, this price channel as a trading range. Obviously that's the top, that's the bottom. Price right now is kind of hanging out in the middle. So depending on our time frame for trading, as a long-term trader, well, not a long-term trader, long-term investor. If I was looking at Dolly Varden as an investor, I might choose to stay away from this action and wait until we got a break higher. So a breakout from the top of this range, or a revisit down to the bottom of the range. And so as a long-term investor, those are the two things I'd be looking for. Bottom of the range where I could buy and feel some confidence level that I was buying a low with the expectation that it would head back higher, or a breakout with the expectation that price is now going to break higher and continue higher. So two possibilities as investors. Let's look at continuing with the idea of long-term investors. Probably the 200-day moving average is one of the most useful moving averages. Of course, we're in the weekly time frame, and so 200 days is equivalent to 40 weeks. And so let's put the 10-week and the 40-week moving averages onto the chart, and we can see that Dolly Varden just last week, so there was 6 August, just last week tapped the 200-day moving average and then moved higher. So we can talk about Japanese candlesticks. That's an indication of elevated energy. So that's actually a bullish candlestick there. This is a fairly impulsive candlestick as well. And so long-term investors, that would be a reasonable buy point for Dolly Varden. And waiting for, as I was saying a moment ago, waiting for Dolly to return to the bottom of this price channel, well, that may be a long wait, and it may never occur. Of course, if you're a precious metals investor, you're hoping that it never occurs. Let's go ahead and drop down to the daily time frame on this chart. We have daily time frame here, and so now we want to turn off the 10 and the 40. We can turn on, well, before we do that, let's continue with just looking at support and resistance. And so what's catching my eye now is that we've got a support resistance zone somewhere in here. And I prefer to talk about support and resistance in terms of zones rather than straight lines, because most often support and resistance, it's not a line, it's a zone. And so price turns around somewhere within the zone. And so we can see resistance. We got an overthrow on a very impulsive bar there. Little bit of support, but then that support failed. We tested that level again as resistance, and that test failed. And so price drops off. We come back up to that same level, push up into it with another impulsive price bar, push through and above, another big impulsive price bar. And now notice that Dolly price, the price of Dolly Varden, is testing this level, this zone from above. It has turned into support. So resistance, support. And in an uptrend, that's exactly what we want to see, is that resistance becomes support. And so from that support level, we get an upward movement. Price goes up to the top, almost to the top of our channel before pulling back, and then comes back. And just recently, again, this was last week, actually. Week before, last week. Tests that level as support, and then gets a nice bounce there. If we look at, one of the things we can look at here, again, is pitchforks. And so I notice yet again that we've got a potential pitchfork here. And that one's looking pretty good. Let me turn off the upper median line extensions there, so we get a cleaner look. So this is an Andrews pitchfork. Andrews pitchfork's made up of 3 pivot points. We have an origin, and then the 2 pivot points. That gives us our 3. That's the basis of an Andrews pitchfork. What Dr. Andrews taught his students is that at least 70% of the time in a valid Andrews pitchfork, price will come down and touch the median line. And what I have found in my experience drawing forks for the last 15 years at least, it's been a while, that is true. That the Dr. Andrews, his theories, his work is validated based on my own experience. And we can see that in this chart. That price comes down, taps the median line, pushes through and below down to this support level, and then bounces from there. And this interaction along the median line gives us some indication that this is a valid pitchfork. One of the other ways that I like to validate an Andrews pitchfork is to look at the other forms of the fork and see if they also appear to be valid. And so in this case, we're looking at, so these are our choices for Andrews pitchforks. We've got the original fork. Schiff was one of Dr. Andrews' students, and so he came up with the Schiff fork. And then when Schiff shared his work with Dr. Andrews said, well, why don't you try moving the origin over half and down half? And that's the modified Schiff, and that's what we're looking at here. And so we can see, again, price interacting with the median line of this modified Schiff pitchfork, and that price basically reached down and tapped the lower median line of the fork as support. and has pushed up above the fork into the top. In Andrew's pitchfork terms, the next median line is always our target. And so in this case, price has pushed up into the upper price channel. And so the current target for Dolly Varden is the upper median line up here somewhere, you know, which is a dollar or so. And if we wanted to enter this trade, and I'm not suggesting that this is a good entry point by any means, but if we were in this trade and looking for, okay, where do I want to take profits? Where do I want to exit my trade? Or where might price run into some resistance? We'd be looking at this upper median line of the fork as a potential target. Let's look now at some of the indicators. There are two in particular that I like to use, or I do use regularly, and then a third one. First one is moving average, convergence, divergence, MACD, obviously, and then stochastics is the second one. So stochastics is my measurement of energy. And so I like having stochastics on the chart. What I see here is that energy is elevated. We can see here that the indicator line is near the top of its range. Stochastics is a bounded indicator. So elevated energy in this vehicle, referring to any stock or market as a vehicle, anything we can trade. If you can go into your trading platform and put on a trade, that's a vehicle. It's a financial vehicle, trading vehicle, whatever terminology you want to use. MACD, from a momentum perspective, there are two things that I like to keep in mind, and that is bull mode and bear mode. Let me type those labels in there. And if we use the zero level of the indicator, it's this dashed line. Let me expand this actually. Hello. Let me expand this. If we use the zero level as the indicator, the zero level of the indicator as our dividing line, any action above that dividing line is bullish. I refer to it as bull mode. Below that level is bear mode. And so currently in the daily time frame, Dolly Varden is in bear mode because both lines of the MACD indicator are below the center line. So bear mode, which suggests that the primary trend in this vehicle is to the downside. Now, we have to be careful with that because it could be that price has just become oversold and is ready to turn back up and head higher. And it appears that is the case here. We can see we just got a buy signal in MACD. That's when the indicator line, the blue line, crosses above the red line here, and so that is considered a buy signal from a MACD perspective. The histogram, that's the bars we see here along the center line. The histogram is showing us. It's another indication that we got a buy signal. It's that first green histogram bar is just showing the we've got a crossover buy signal. So that's MACD. Let's look. So elevated energy, new buy signal. So that both of those are bullish indications for this stock. Dolly Varden. What else do we want to look at? And then the third indicator, and I only use this indicator on stocks. It's the accumulation distribution, and it gives us an indication of whether investors are buying this stock and holding it in their portfolio, or they're distributing it. They're selling the stock and thinning it out of their portfolio. And in this case, what we see, if we move in on the action, we zoom in on the action. So now we're looking at, what is that, 4 months, 5 months worth of price action. We can see that investors are buying the stock and hanging on to it certainly in the last month, and we could say the last 2 months. So those are the 3 indicators that I use most often. Occasionally I look at RSI, not often, but it's another indication of overbought, oversold. Let's see. Let's look at an index, GDXJ. This is, and I'm gonna get these indicators out of the way, because again, I like to start with a clean chart, and I recommend that if you're new to technical analysis, that you do the same thing. Interesting enough, I see basically it's the same price action that we just saw in Dolly Varden, which is interesting. And notice that I've switched to the monthly time frame, and I'm starting with just a simple trend line, catching the bottoms of this price action. There's a lot of choices when you start drawing trend lines. You know, some people would insist on drawing from the bottoms of the very bottom of the price bar, which would give you a trend like that. I personally don't find much value in that. What I find is a trend line drawn under the body of these candles is more useful and more effective, if that's the right word, more likely to be useful in the future when we draw the trend line using the candles, the body of the candles, rather than the wicks. So that's terminology there. When we're looking at an individual price bar or candlestick, we have the body, that's the thicker part, and then we often have wicks, which is, you know, there's an upper wick and a lower wick. And I'm okay with the wicks poking down through a support level or into a support zone if we want to talk about support zones. So anyway, that's where I would draw the lower support line, trend line for GDXJ. And of course, this is, if you're not a precious metals investor, this is one of the ETFs for precious metals mining stocks. And so let's do the same thing we did in Dolly. We'll copy that line and paste it, and then move it up to the top of the action. And there again, we can see that we've clearly identified a price channel. And confirmation, you know, I always like to verify that the work that I'm doing is valid. And so what I see here is that price came down. I'm focused on this candlestick right here. If you see the vertical dash bar there, focused on this candle. Notice where the bottom of the body of that candle stops. We got a little bit of a lower wick, but it found this on this bar. Price found support along the top of this channel, broke through, tested that level from below, so support becomes resistance. And that's exactly what happens in a downtrend, is that support becomes resistance. Price tests that level from below, the test fails, and then price heads on down to the bottom of this channel. We didn't quite make it back up to the top of the channel here, another fall off. And now we can see again testing as resistance, there's support, and currently just coming up off of that support level. So that's another example of support and resistance. Where I started on this chart was noticing that this price channel looks exactly like what we just looked at in Dolly Varden. And so that suggests to me that Dolly Varden is basically trending with the other mining stocks. There's nothing that pushed Dolly Varden in one direction or the other. Basically, it's just going with flow at this point. Let's continue here. We'll throw the MACD on this chart. Let's zoom out here and remember that we're still in the monthly time frame. So we're getting big picture here. And in the monthly time frame, MACD is in bull mode. So as a long-term investor or a long-term swing trader in this time frame, MACD is in bull mode and on a buy signal, because the signal line, the blue line, is above the moving average. I'll refer to it, the red line, and both of them are above the center line of the indicator. So bullish MACD in the monthly time frame. Let's take a look at stochastics, see what energy is doing for us, and elevated energy. And so if you're bullish on the mining stocks, both of those are good indicators. Bull mode, on a buy signal, elevated energy, and price has recently bounced off of support. And so as a long-term investor, that's encouraging. With that amount of technical analysis in the monthly, I'm okay, comfortable now dropping down to the weekly time frame. No surprises right offhand. Let's zoom back out, and so now we can see again. Get rid of that distraction. We can see more detail, but this price channel still looks good. That's still, to my eye, is a valid price channel. MACD in bull mode, albeit in the weekly time frame. Notice that we're on a sell signal, although that's kind of choppy. I would think of that more as chopping, sideways chopping action, rather than a definitive sell signal there. We look for support and resistance in this time frame. I see the same thing that we saw in Dolly Varden. Funny that they're so similar. So we've got this support resistance zone. Prices just bounced off of that level. Probably draw the top just a touch higher. You see, when I draw these support and resistance zones, I look for tops I look for tops of candles that look like they are acting as resistance, and so that catches my eye. That's three candles, five altogether, where price is testing this level as resistance, and then we get a breakthrough, and notice there's a gap there. That's an indication of elevated energy there at that. As price is breaking through that resistance level, it actually gapped up, which is elevated energy, pushes through, and then tests that level for support. And so now again, we're back in an uptrend where resistance becomes support. Resistance here, support here. When we get a support and resistance zone tested like this, it increases the likelihood that as price goes forward, this support resistance zone will continue to affect the chart's behavior or price behavior. So, and we can see that here. You know, we test that level as support, price chops sideways a bit, and then tests that level for support again. And so that's 2 weeks ago. Last week, we had a test of that level as support. Let's draw a pitchfork, because my eye is noticing one. And let me grab a pitchfork. Let me change it back to the original fork. And so let's talk now a little bit about Andrew's pitchforks, or a little more about Andrew's pitchforks. When I am drawing a fork, the first thing I look for, and of course, you know, like this is 15 years of drawing forks on charts, thousands and thousands of forks. And so probably some of what I do with pitchforks, I'm not even aware of consciously. But what I am aware of consciously, what catches my eye when I'm getting ready to draw a fork, what catches my eye is this crossbar action. We can see it here, crossbar action right there. So let's draw that fork, just because I'm talking about it. And so, you know, that's not a bad looking fork. It's not a great fork, but the key point here is that it is this cross action that catches my eye first when I'm looking at Andrew's pitchforks. Let me get rid of that. And so that's what we've got here. We've got an Andrew's pitchfork. The next thing I look for with forks are the wicks. I'm looking for price candles with distinctive wicks. When we talk about energy, one of the ways that elevated energy shows up in a price chart is, I call them pokey bars. It's really, the wick is the poke. So I call them pokey bars. And so that's a pokey bar, a long lower wick, elevated energy on that price bar. We've got two bars here as potential pivot points that we could draw a fork for, and they both have upper wicks, pokey bars. And of course, here again, we've got two bars that we could choose from as the third pivot point in this Andrew's pitchfork. The bars that I picked look pretty good. You know, if we go and look after we've drawn an Andrew's pitchfork, what we want to do is look at the price action relative to the median lines of that fork. And what we can see here, just like Dr. Andrews taught, and of course, Dr. Andrews, oh shoot, he was teaching back in the 40s and 50s. I have to refresh my memory on that. What he taught his students is that 70% of the time in a valid pitchfork, price is going to rise in an uptrend, rising market, price is going to rise to the median line of the pitchfork. And then there are 5 different behaviors that price might do next. And those 5 behaviors are well defined. I'm not going to get into them in this session. We're already at 40 minutes. But what we're seeing here is an example of a zoom and retest. We could refer to this as a zoom and retest. Price zooms through the median line, taps the upper median line, and then retests the center median line for support. So looking at how price is interacting with this fork, I would say that this is a valid pitchfork. I'll spend a little bit more time on that. So here we see the center, the median line of this fork. It's acting as resistance. There it's support, 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 resistance, resistance. Here, when price drops back down, it stops at the median line. Price found support at the median line, zoomed through, dropped through the median line, and then tested it from below. Didn't have enough energy to close above that level. In other words, price is finding resistance at the median line of this fork. Price pushes higher up into the upper channel again. Doesn't quite make it up to the upper median line before falling off, drops back down to our support level, and then now in the current week, price is pushing up into that resistance level again. And so based on the price interaction with this Andrews pitchfork, I'm confident that it is a valid fork. And because it is a valid fork, the same thing that I said a few minutes ago about support and resistance zones continuing to act as support and resistance going forward, we can say the same thing about a valid Andrews pitchfork. As price goes forward, it is likely that it will continue to interact and react with the median lines of this fork. Now, before we move on, let's look at, because we had a couple of choices here at where we drew this fork. Let me get rid of that for a moment. Let's just play with a straight line, and I'll show you. This is the line that catches my eye when I'm interested in drawing an Andrews pitchfork. It's this. I call it the crossbar, but it's this distinctive action that will become the crossbar of an Andrews fork, as we see there. As I was saying, we've got 2 pokey bars at the top here where we could choose as the upper pivot. And then we've got 2 bars down here that we could choose as our lower pivot. And, you know, with practice, you'll develop an eye for which is most likely. And of course, there's nothing wrong with, you know, we picked the first bars, and if we find that we don't really like the price action with that fork, well, let's see what's it look like with the other one. You know, that's not bad, but it's not as good as the first. You know, it's not as good as the fork drawn from that bar, because see, we don't have price interacting at the median line. It's just, you know, the price action has gotten a little bit sloppy. You know, we get an exact touch there and a touch there, etc. But I like this. I like that. That's cleaner price action to my eye let's look at if we move that fork. Yeah, I don't like that fork at all. That's very sloppy. I wouldn't consider that a valid fork. So I think that the first pivot points we picked were probably the most valid. And so that's we're still in the weekly time frame. So that useful for longer term traders, swing traders, depending on the length of your trades, and long-term investors to look in the weekly time frame. Just as a technical analysis, a methodology. How do you go about doing technical analysis? I like to start in the higher time frames and then work my way down into the daily time frame, that's where we're at now. We're in the daily time frame, looking at GDXJ still. Let's revisit. We can look at our price action again. Notice that we've lost our pivot points. When we changed, because we were in the weekly time frame, when we picked the pivot points for our fork, those pivot points don't exist down in the daily time frame. So let's reset our fork based on those pokey bars. Reset the origin. And so now we're back to, this is essentially the same pitchfork that we were looking at in the weekly time frame. And again, I like this price action relative to the fork. And I would say that this is a valid pitchfork. Once I've identified a valid pitchfork, I like to look at the other forms. And I typically jump to the modified shift for starters. And what I see here is, again, exactly what Dr. Andrews taught. Price rises up to the median line, breaks through, uses that level as support, moves up to the next median line, breaks through, and now is finding support at that median line. Let's get rid of, we'll keep in mind that we've got a support zone, but let's get it off the chart since we're talking about Andrews pitchforks. So I would say that that's a valid pitchfork. Let's draw the next median line. And again, we've got price interacting at that level, and it looks like I'm noticing that peak up there. If we were to draw in the third median line extension, price didn't quite get there. One of the ways of looking at that is as a sign of weakness. The fact that we're looking at this pitchfork and we've got all this price action interacting with the median lines of this fork, and yet price was unable to reach the next median line. And remember what I said a few minutes ago, when we're working with Andrews pitchfork, when price breaks through a median line in either direction, the next target automatically becomes the next median line. So in this case, price finds resistance and then pushes higher. This is the target. When price breaks above and did so with energy, we've got a gap there, big gap there. So this is a high energy move, impulsive price movement, but it didn't reach that target. That's a sign of weakness. And we can see that after that indication of weakness, price dropped off fairly substantially. So that's median lines. If we look at our indicators again, we can see that MACD is in bear mode, so suggesting that the primary trend is still to the downside. And of course, MACD is a lagging indicator. And I would point out that all indicators are lagging because they are based on data that occurred in the past. So there is no way, it is impossible to get a leading indicator from something that happened in the past, but still people talk about leading indicators. The point that I'm making here is that MACD is a lagging indicator. So the fact that it's still in bear mode does suggest that the primary trend is to the downside until price reverses. And there are ways of identifying potential reversals. We're not going to get into them in this video. But bear mode, but on a buy signal in MACD. We got a fresh buy signal, looks like yesterday. Energy is elevated. So two bullish indications based on our indicators. We don't have volume, and so I believe, let's see here, if we get, or do we have volume? Do we get volume in GDX? We don't. Oh, we do. So some of the indexes provide volume. Oh, well, and this is an ETF. That's what I think of GDXJ as an index, and it's not. It's an ETF. So we do have volume. We can see accumulation distribution pretty much at a flat. You know, obviously there's noise in there, but if we zoom in a little bit, just to the last, what is that, five months or so, coming off a low, yeah, it's mostly chopping sideways. So not a lot of useful information there in accumulation distribution, other than, I guess, one thing we could see, investors aren't flocking to the mining stocks. If investors were buying mining stocks hand over fist, I would expect to see accumulation distribution moving decisively higher. I mean, it is moving higher, but I wouldn't call that, it's not impressive. You know, it's not a dramatic move higher in accumulation distribution. What else? Anything else we want to say? We haven't looked at the moving averages. Let's throw, because we're in the daily time frame, we want to look at the 50-day and 200-day moving average. And they not giving us a lot of useful information, really. So let's be done with that. I'm going to switch now. Let's take a switch. Let's go look at the NASDAQ. Hello, NASDAQ index, and get rid of, again, let's start with a clean chart. Get rid of all of our indicators, all of our drawings. Excuse me. Daily time frame. So that was today's action. Big movement today. 2.4%. That's a bullish impulsive price bar. I notice, however, that all we've done, or what we did today, is push up into this support resistance zone. Here it is acting as support, resistance, resistance, resistance. We'll see tomorrow whether price is able to push through that level. Let's see if we extend this back further. Reset chart. That looks like a pretty good support resistance zone. We can see here acted as resistance, price broke through, there's support, 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 support fails. on big energy, and of course there's a lot going on. There's a lot going on in the markets, the equity markets in particular. We've got the unwinding of the yen carry trade, bursting of the AI bubble. Anyway, there's economic uncertainty, an election upcoming, any number of things going on right now that are affecting the markets. Let's talk about gaps, because in this particular market, they are relevant. We've got a lot of gappy action in the charts right now. This is on the downward movement, big gap there, big gap here, another big gap here. So a lot of gappy action, a lot of gaps there. When we see a series of gaps, that's an indication of very elevated energy. Any gap is an indication of elevated energy, because obviously for price to jump in either direction, it has to have energy to make that move. I like to talk in terms of energy. Some people might say volume, got to have volume to make a price movement, a gap, a big gap. Anyway, high energy movement to the downside, and also volatile. When you see an extended high energy movement like that, it also indicates volatility. And notice this is why I went off on this tangent. I'm seeing the same kind of action as we're moving back up now. Let me get rid of these, and let's highlight. We've got a series of gaps happening as price is moving upwards. And so again, this is a high energy price movement to the upside. That's what's going on right now in the NASDAQ tech stocks. Let's see. As I was saying with the last chart we looked at, when I'm thinking in terms of Andrew's pitchforks, what catches my eye is a big price movement like this. I refer to it as the crossbar, because this will become the crossbar of our Andrew's pitchfork when we draw it. And I'm going to draw it from those 3 pivot points. I'm going to switch back to my original fork. And what I want to do, I'm turning on, this is TradingView that I'm working in. That's the charting platform I use most frequently. And when I'm working with pitchforks, I want to have the magnet on. That's this blue indicators that I've got the magnet turned on. And when the magnet's turned on, the points of the pivot points of the fork will stick, magnetic effect, stick at the points that I draw to. It'll go to the low of that bar and stick there. So it helps me draw accurate forks. So, and what I see with this particular pitchfork, we haven't reached prices yet to reach the median line of that fork. So we can't really base its validity on that. Let's switch to the modified shift. That's giving us a little bit better. And so as Dr. Andrews taught, price 70% of the time or more rises up to the median line, and then does one of 5 behaviors. I'm going to get those off the chart. And so in this case, price has almost reached the median line and gapped over. And so that gapping over the median line is an indication of this could be a valid fork. Notice what I just did there. I switched from the modified shift to the shift fork, and this looks even a little bit better because on this this candlestick, this doji candlestick, price taps the median line, pulls back a little bit. So price found resistance at the median line, pulled back, and then on the next session, the next day, price gaps over that median line, gaps over resistance, and we get an energetic high energy bar there. So impulsive price action indicating that there's a lot of strength in this movement, albeit volatility is high. Volatility is elevated based on all of this gappy action. This is very gappy price action, in my opinion. High energy movement. Let's take a look at the indicators now, MACD and stochastics. So here's my stochastics bear mode. Both indicator lines are below the center line of the indicator. We got a buy signal 2 days ago. So Tuesday, we got a fresh buy signal on the NASDAQ. And that buy signal is still in place. So that's bullish. And if we look at stochastics, I would expect that we're going to have, very elevated high energy. So based on stochastics, we've got elevated energy. We've got a new buy signal in MACD, albeit MACD in bear mode. So bullish based on those indicators. Let's look at the moving averages, which of course the 50 and the 200. And notice that price is pushing up into the 50-day moving average. That occurred today. And price actually was able to close above that level. So during the session today, price pushed up into that level and then closed above it. And so that's another bullish indicator suggesting that price is headed higher, could head higher from this level, higher from the 50-day moving average there. So high energy in the stocks. Let me look now. Bear with me for a moment, folks. Yesterday, I did a video where I looked at the stocks in the AI bubble, and I'm gonna grab those charts and throw them onto the screen because I want to see what did the individual stocks. This is an ETF of all 7 of the Magnificent 7 stocks, which there you can see the list. Those are the Magnificent 7. Big impulsive price movement today, and we've got some volume coming in. So got some decent volume. Accumulation distribution rising, so bullish action in the ETF. Google basically flat today, so nothing exciting. Oh, big move in Amazon. So big gap today in Amazon, and notice that volume bar. So gap higher, a rise in volume, fresh buy signal, energy rising. So a number of bullish indicators in Amazon. And of course, price, the price action is bullish with that gap higher there, that move higher today. What on a percentage basis? What we got? 4.4%. So that's pretty good movement in Apple. I'm sorry, in Amazon. This is Apple. First thing that caught my eye here is in MACD. We've got a both indicator lines have just moved above the 0 level of the indicator, which again, that's bull mode, which suggests that the primary trend in this vehicle is to the upside. Elevated energy based on stochastics. Didn't get the big gap that we saw in Amazon, but we did get a gap. That particular candlestick, any doji candlestick, when we're talking in terms of Japanese candlesticks, any doji is an indication of elevated energy. So that's an indication of elevated energy. Could be a topping candle as well, albeit based on everything else that's going on, it's probably better just to think of it as an indication of elevated energy. More bullish action here, bull mode on a buy signal, elevated energy. Nothing exciting in volume today, but upward movement. That's Facebook. Microsoft, buy signal was yesterday, elevated energy, increase in volume. Let's see, NVIDIA, another big day today, pushing up, continuing up through. Notice that price pushed through, that was Monday, I believe, pushed up above this downward sloping price channel and is continuing that move higher. Notice that today price pushed through and closed above the 50-day moving average. And so that's bullish action, suggesting that price could be headed higher. Tesla, yeah, pretty nice candle, elevated energy. Don't have a buy signal in MACD yet, but it looks like we're headed in that direction. Maybe in the next couple of sessions, we might see a new buy signal in Tesla. And then these are the indexes. And so just a quick look, you can see big gap, big move higher, 1.6%, big gap, 1.3%, big gap higher, 2.4% in the tech stocks. So very bullish action in the equity markets today. I'm going to wrap up now, folks. We've been at it for about hour and 10 minutes almost. I didn't get any requests for chart analysis, and so I just kind of popping around looking at miscellaneous stuff. What I'll do for my next live session is I'll prepare a checklist, a certain order in which we will go through the steps of technical analysis. Start with a clean chart, identify support and resistance zones, look at the moving averages, look at the indicators, look at Andrew's pitchforks, look at the Fibonacci tools, etc. And so I'll be more prepared to do a presentation in my next live session. So that's all I've got in this video. I'm going to close out this session. Of course, this is the first live that I've done, and so it looks like if I click the end stream button, that's going to end the session. So let me do that. See you, folks. No longer be live. In.